The startling footage we're about to show you was photographed by a 42-year-old, Romero Valadares. This video was taken yesterday afternoon at his son's 7th birthday in the city of Passo Fundo, Brazil. It was sent to the local news bureau there and sent to us via satellite just a few minutes ago. All initial opinions are this is genuine. What you're about to see may disturb you.
Move, children. Vámonos.
Oh, we have so much fun making these intros, Lee and I. We'll have to do a mashup of all of our intros, like when we have a celebratory type moment when we get this big pull down that is up and coming. Panic signs in the market. Guys, we're going to focus on this video, going over the trade setups I've shared with you over the last few weeks. Look at the ones that are in profits. Look at the ones that are giving you opportunities to potentially re-enter. I added Ethereum by popular request as well. I'll show you where I think that is going and opportunities to trade that. No big rants on this video because we got a lot to cover. It's Brendan from Market Makers. I spent 11 hours in the car yesterday, had to drop Kilo off, one of my Dutch Shepherds, all the way down, back down to Naples, Florida to my trainer down there, 5.5 hours down, 20 minutes to drop him off, get gas, 5.5 hours back up. So I am beat. Okay. I'm beat. So no big rants. Going to focus on the charts. Very important updates here. All right, guys, let's go ahead and look at the E-mini. We've been over this many times. So I'm going to spend 10 seconds on this so we can cover other material. .com pattern on the left, weekly time frame. Modern market on the right, same exact identical rally patterns, identical double top patterns. You can see it on both sides in our current candle, looking for the rollover. We're in earnings. Perhaps we are waiting for mega cap tech to report to really get some more velocity for the downward move. We're going to look at this with some of our indicators as well, okay? But just fantastic pattern, tracking identical, making a co-equal high. A co-equal high, look at the high here, 41.89. And where's your high over here? 42.08. So you made your co-equal high just like you did over in .com, okay? So that's fantastic. Okay, a little bit more in 10 seconds. Weekly time frame. What are we waiting for again, guys? This big double top to wave down, break your neckline, come down to our target here, mid-June, it's June 14th, mid-June, looking for that 35% drawdown, 31.41 on the S&P, give or take 150 points because this is TA. This is not exact to the dollar. Sometimes it is, but this is TA, guys. So looking for that 31.41 target to be struck. People are asking, is there enough time to get there? The answer is yes. Markets fall 5 to 7 times faster than they rise. A lot of that has to do with the work of Hyman Minsky. He explains that very well in his writings. Did a little video on him last video as well, included his Minsky moment, which has been coined post-mortem since he died. And you can see how that works out. But when everybody goes to sell, when panic sets in, that's why you get these massive, quick downward movements, okay? Remember, this is the historical norm of where the S&P would trade in a recession. This is why Marko Kolanovic from JP Morgan, why Mike Wilson from Morgan Stanley, why Citibank, why Bank of America Merrill Lynch are all now holding these low 3,000 targets because the recession is coming. Remember, the Fed itself, for the first time that I can remember, is predicting a recession, a mild recession, which means run for the hills. Because as we covered last video, Ben Bernanke predicted no recession, and we had a global economic collapse shortly thereafter. Months thereafter, a global economic collapse. So the fact that this Fed is at least coherent enough to predict any recession, ooh, it's going to be bad, guys. The indicators compared to '08 are worse now for what's coming than what we had in '08, '09. So GFC 2.0, okay? GFC 2.0, as George Gammon calls it. I want to give him credit for that because I like it a lot. Collapse wise, I do anticipate this is going to be very dramatic. So this range that I've given you guys, the reason this is so important, 4143, 4173 on the S&P. We're covering this because this is the largest market cap, 500 companies, 35 plus trillion dollars, give or take. It goes up and down with the price, but $35 trillion market cap. This range has provided multiple opportunities, even in the last few days on these swings, to get in and out of the market or take a position and hold it for what's to come. You can see it over here at our previous pivot date. Remember, this pivot, the previous pivot, was not the high in the range. You had other highs in the range. This pivot on the 41-day was not the high in the range. The last two candles got higher. But what did this do? I gave you this trade on YouTube and in our Discord, 9% drawdown. Other pivots were the exact high. That was a CPI day there. And the exact low. Been over this many times. I want to keep doing it. Exact highs, exact lows. But the last pivot was not the exact high. I anticipate this playing out the same way and rolling over. The bottom line is, guys, you have to understand what's happening in the marketplace. You have a very low breath rally right now in the S&P. I'm going to show you that on this other chart. Let's go ahead and go to that. Looking at our S&P chart here. So what do I mean by breadth? Okay, this is the amount on this line here. This is the amount of stocks that are above their 200-day moving average. Because when you look at it at an index level, you see the 200 and you can see the 200 curling up like on a daily time frame. But what's the amount of stocks above the 200, individual stocks? It's 58%. To give you an idea about this, we are at 76%. Well, actually a little bit higher, 76.4% for this last rally. So you're almost 20% lower than this previous time you were at this exact same price level. So that's participation in the rally. In other words, this is part of Lyman's work, okay? Wyckoff, Lyman, these guys are pioneers in their fields. Wyckoff, obviously, how money moves through the market and volume analysis. Lyman looked at breadth. And there's a book actually that was written called Market Timing. You can check that book out. It was written about a decade ago. It's expensive. It's one of those small production books, but it's looking at previous market tops and bottoms based on the methods of Wyckoff and based on the methods of Lyman. It's just an interesting read. It doesn't teach you how to do Wyckoff or utilize Lyman, but it shows you how it is in application. Anyways, I find it a great read, but it's called Market Timing. I forget who wrote it, but you can find it on Amazon. Maybe get a used copy because it's a very expensive book, like oftentimes over $100. But at any rate, so we had 20+% more participation in this rally. This is just another indicator why the rally is going to fail. Your money flow is turning down. Your volume ratio is up here, overbought here. This is the buying of the volume that there is. However, when we look at the actual volume, let's go ahead and throw our volume on here and do a volume analysis on this. Where did you go? There you are. Again, volume down, left to right. See, here's your rally up, volume down, left to right. Actually, and all the way back to April 14th. Every single subsequent candle has been lower and lower volume as the price continued to move up. This is why you're rolling down. It's holding in this range. You're fighting algorithms. Remember, 43% of the indices are bought by algorithms. Remember, worldwide, 90% of money at all times is long. We showed you the hedge funds broke a record 10-year high on shorts on the S&P, and they shorted the day before the CPI, guys. Then the S&P was what, 40.26 or something, or 40, I think, what was it, 41.26? But anyways, they didn't hit the high. They didn't care if they hit the high because they have millions and billions of dollars. So they just are looking at the general direction of the trend, as am I. That's what I told you. Upside risk. Where could it get to? Apple just reports killer earnings. Microsoft, Google, NVIDIA, killer earnings. Where it could get to is 42.89. That's your upside risk. I don't anticipate that. Is it possible? Yeah, it's possible, but I'm trading in the high probability area going all the way back to May of 2022. That gives you nice moves in the markets because I want to complete this double top for the next leg down. Okay, that's what I'm looking at. And where you will really see a breakdown as well is once you cross that 37.55. That's when you know you're going down and you're definitely retesting your lows, whatever that was, 3,400, 3,500, before you get down to the 31.41 in the marketplace. Let's go ahead and look at the VIX. Guys, the VIX hit the all-time high level. You see this? January 4th. The VIX hit 16, what is that? 16 spot 34. It's a little more elevated now, 16 spot 99. This moves inversely to the S&P. You're going to get an explosion in the marketplace in the VIX when everything starts dumping. It measures volatility. This is complacency in the market. Guys, it's going to be phenomenal when this thing starts to sell off. Now, this is a risk assets. Risk assets are equities, right? You have your equities. Those are called risk assets. For those of you that are new to the channel, when you hear these pundits say, "Oh, this is a risk on environment, risk off environment," Bitcoin is the riskiest of risk, which is why I think you're seeing more dramatic decline. But remember, you move at a beta to the stock market, right? You move at a beta. Bitcoin here on the weekly at 28.6, looking for that drawdown to 12.8 to low 13s to sweep your previous low. You're topping out here. This is your weekly time frame. Been over this pattern, the Gann market impulse pattern, many times. Let's go ahead and look at Bitcoin on the daily time frame. You can see you pumped up. Remember last video I made for you guys, we were on this yellow candle, this selling candle, and what did I tell you? I think this is going to come back up for a double top, right? So if you go to the 8-hour time frame or something, you can see this. On a daily time frame, it's one single bar, retested 30,398. What did you do? You sold back off. But here on the daily, if you hold this range, right? If you hold this range, you're putting in a doji right now, which can be a trend reversal. It can also be a continuation of trend, but it can be a trend reversal after a sell-off. And if you look at this, get off that. If you look at this, if this holds here, you can come back up and make perhaps a Gartley pattern as well, or just a traditional double top, make a lower high, and this could be your breakdown. So again, it's about being patient and waiting for opportunities. You could see the market try to come back up and watch your key inflection points here. Let's look at this on an 8-hour time frame because this is what you want to see with Bitcoin. Let's look at their indicators real quick. Money flow is flat. You're basically riding the median line. Volumes definitely come off a little bit. Remember, this trades on centralized exchanges by and large, so it is controlled it's much more controlled and manipulated than, say, the equities market. Also, just based on market cap. 8-hour time frame, you can see in orange our Wyckoff range. You came up for up thrust, you came down for down thrust, you pump back up. 30,398 is a key fib. As you can see, you got rejected on it. You fell back down, and now you're getting rejected at the 28,904. But let's get rid of these fibs. You can see this, okay? So again, this is a concept of mini-cough structures. You can see here. Let's go ahead and look at this. Put this fib off. You can see we had this Wyckoff range going. You're up thrust, down thrust, trying to break out, come back down, pumped up. You made another mini cough structure. And what'd you do? You fell right back down to the top of your Wyckoff range. So the smaller in time you go on time frames, you can see this at a different level. And again, if you look at this on the daily, you could easily see if you get any type of bullish momentum, how you come back up here, form a bearish shape, and fall back down again when the market rolls back over because you're trying to hold this base right now. So I would watch those levels. I would watch that level 30,398. As you can see, you've got a lot of nice resistance there, but be aware price has moved up to 31,000. Again, the upside risk is to 31,463. Okay, but you can always just pull a simple fib retracement as well. Let's go ahead and do that so you can see what I'm looking at here. If we just do a simple fib retracement on Bitcoin, 786 again, 30,461. Okay, you're seeing a lot of confluence here for 30,461. I like that level. Watch the 618 as well, 30,000 even to come back up and maybe get rejected there. So you'd be looking at this on a daily time frame perspective as something like that or something like that. Okay, coming up to one of those two levels, and then you'd be making this massive double top, which you have a neckline. If you break your neckline, you will descend further. So that's that trade setup. I would wait for a rebound. I don't chase things after they sell. I wait for them to settle and then move back up because price moves in waves. Let's go ahead and move forward. Looking at the NASDAQ on our 3-day chart, guys. 3-day chart, upside risk for the NASDAQ remains 13,455 because that's where you got to on just above that on your June rally last year. The range of 13.1 to 13.2 has been holding beautifully for day trading purposes, but I'm not in this to day trade. I'm in this to swing trade looking for a big move down. We're going to zoom in on this on the daily. You can see you're just above your Wyckoff range. At a very minimum, I think at some point you're going to come down and test this Wyckoff range. But where I have the NASDAQ going on the next leg down, 9,200 to 9,500 because the concept of sweeping your lows. Okay, we've been over that many times. I won't spend too much time on it because on the daily, when you zoom in, add some fib levels here, you can see this. So you can see the top of your range up here around 13.2. Provided great entries here, and you're holding this 13.45. You can see at 13.56 how many candles are just stacking in between this over and over again. So that 13.2 area and anything above, again, there's your upside risk. Looking at this from another fib perspective, but your upside risk remains 13.4. Okay, 13.417. Strong tech earnings come up. Remember, my premise is the market's going to roll over. Okay, so the smaller movements like this, I view this as opportunities to short, not opportunity, not something I would say, man, I missed out longing from 13.1 to 13.4. I want these to go as high as possible before entering trades on them, okay? But I do believe you're going to have some stellar news, stellar guidance, stellar earnings to come up to that 13.4 because this is providing on a daily time frame a ton of resistance at 13.2 and below. So be very careful. I trade, a lot of people ask me what I use for stop losses. We have a special indicator called MTF ATR in our room. It's one of our free gifts, guys. If you do want to join our room, you can join our room for free by checking out SimpleFX or by checking out BingX, our two key sponsors here on this show. The links with our bonuses and all the details are in the video description. I'll pin them in the comments. They'll pay for you for a free month if you want to come. But the point is, you also get a half dozen free indicators custom made by Fractal Trade 15 for our room. And those are free, guys. You get to keep those for life. So come check those out. But ATR, there's a bunch of ATR indicators on TradingView. ATR is the average true range, the price movement. I typically trade at 2 to 3 times ATR. That's my stop loss method. It comes from doing a lot of trading in the Forex space over the last, 20 years. But that's typically my stop loss method. So other people use fibs, market structure, pattern structures, whatever you want to use. But I use ATR, I use it on the daily time frame typically or the 8-hour time frame. So just be aware that's your upside risk. Let's go ahead and look at some indicators here as well. Money flow is bearish. You can print it a double top, as you can see, and volume is declining quickly. Now, your breadth here in the NASDAQ is much better. Okay, it's 67%. 67% of the stocks in the NASDAQ 100 are above their 200 or above their 200-day. But again, the S&P is going to drive this market. We know that tech outperformed because tech was not supposed to perform well according to the geniuses on TV going into this year. So tech, of course, rebounded and other sectors suffered, such as energy, okay? But now tech is kind of flatlining here on breadth as well. But you can see this is why everything's so flat, but the volume's dropping. There's less money flowing into the assets, and we have more earnings to come. Looking at the DAX, and guys, I added the CAC, the French 40 back as well by popular request. So again, I'm in the DAX trade, guys. The DAX trade, I told you the range that we were looking at, I'll look at it on the daily, so the 3-day chart, but was specifically 15,733 to 16,2. And we finally came up some here on the 3-day chart. Your upside risk remains at 16,2. Okay, it's still your upside risk, and that's right just below your all-time high. The DAX looks like it's running out of gas to me. Again, further movements down on the DAX where I'm predicting this going is when you start to decline, okay? And the DAX moves basically with the S&P, not candle for candle, not day to day, but in the same range. In other words, what do I mean by that? The DAX bottomed in October, the S&P, NASDAQ, US indices bottomed in October as well, and then the DAX went on a parabolic rise. Again, the DAX went down 74% in Y2K. A lot of German car companies in this 40 stock index, okay? So you have BMW, you have a Mercedes, Volkswagen, Porsche, of course. So lots of bad news about cars is already coming out here in the USA. And guess who's a big importer of German cars? We are. The USA is, of course. I drive German cars. I love my AMGs and my M cars. But this is what we're looking at, guys. So the DAX, it looks between the fibs. Let's go ahead and look at the daily. Oh, I'm sorry, the wave down. So where I'm looking at, remember, this is a gigantic double top coming up from the pandemic low. You see this gigantic double top, but your neckline is just about, 11.9, 12K. So I'm looking for this. If it sweeps its low it put in October, remember the DAX outperformed. This is why I'm interested in shorting it. If it sweeps its low, it's coming back down. I'm looking at the one fib at 11,186. Let's just get a drawdown. Let's just get a drawdown here. And you can trade this on SimpleFX, guys. It's a 30% drawdown to get to that level. 30%. Massive, massive money can be made if you understand what's happening in the marketplace. And of course, zoomed in on the daily time frame, the DAX hit 15,974. I got into this trade. I think my best entry was 15,950. I was driving in the car, so it was difficult to do, but I got it at 15,950. My blended average is just a little bit below that, but that was my best entry. And we got one candle down. Nothing to write home about yet. There's reasons I'm in this trade, and we could be coming up to make a double top again. Okay, I'd love to see it do something like this, stack a couple candles and fall down, but we got to be patient. Here's our 45 angle. Here's your 200 curling up. Looking at the DAX, overbought on the MFI. MFI starting to curl down, right? Looking at our volume here as well. Oh, the brightness just went down. There we go. Looking at the volume here, volume ratio is getting lower again, and the volume momentum, it went negative, okay? So looking at this trade, again, this will follow, and here's an example of my multi-time frame ATR you guys do get for free. On a daily time frame, the DAX moves about 200 points per ATR, right? So again, adjusting position size, these are all things you can learn about on our Discord, guys, but adjusting position size to allow for price to move is very important when you're looking at the dynamic nature of the market and how price will go up and down in this volatility, because this volatility is chopping a lot of people up, I guarantee it. So we're looking to see if the DAX here on the daily comes back up, rebounds, just ping pongs in here before it finally breaks down with the US markets. Let's go ahead and look at Ethereum. Didn't I put the CAC on here? Oh, we'll have to load it. Let me go ahead and load see, I'm well prepared for you guys. It's only 20 minutes in, so we're doing good on time. Let me load CAC. See if I have a chart done. Dun, dun, dun. The anticipation, because I said I had it, so I wanted to make sure I had it. Oh, good. Here we go. Just a couple of things to turn off here. Looking at the CAC on the daily, here's our Wyckoff. Remember, we bounced up off of it. Look, a good entry point that I'm watching on the CAC here. We pumped up here, was right towards our upside risk target here of 75.79. You can see this target here. It hit, it got rejected. We're on the 3-day chart. Looking at the money flow, it's still bearish. Volume's going to convert this to a daily so we can see some more current information one day. There we go. So you're overbought as well in the CAC, as you can see. And let's look at this. So your entry here, again, if this rebounds back up 75.79, that may be a good entry point. Upside risk would be 7,700 at that point. Okay, I'm always looking like a fib level up. Plus, the indicators are all showing it is overheated. So this is something I like. This is a trade I like. Again, we exited Wyckoff. We got our Livermore pivot out, but the CAC should not be able to run much higher, especially if the DAX rolls, especially if the US indices roll. And again, the CAC, you can see printed this massive double top as well. Okay, not to mention this disjointed double top that you're currently printing, stacking candles up here. So I saw the on Reuters European inflation. You guys measure inflation. It's kind of funny how you measure it compared to us, but they actually had a metric where you strip out cigarettes and alcohol. I love you, Europeans. You strip out cigarettes and alcohol, and you get a. They had a bunch of different ways you measure the inflation, but your core, I guess, what you would call your core inflation, did go up, just like ours, just like your overall inflation eased. Right? You don't see it in the prices because inflation is compounding, and when people say inflation's going down. Inflation is still going up. The rate of change to the upside is coming down. It's two totally different things, right? If you say prices went up 5% this year, you say, yeah, but prices next year are going down 3%. That's inflation going down. Saying prices went up 5% this year and prices next year are going up 3%, that's compounding. That's on top of the 5% they already went up. But again, central banks, governments, because they want you to elect them, even though they're all grossly incompetent, will sit there and lie to your face. That, by the way, is why I think our central bank, the Fed, said that we're going to have a mild recession. It's in their forecast. So that way, if it's a shitstorm recession, which I think it will be, they can say, well, we did predict it, because the worst thing you could do is not predict anything and have GFC 2.0. So looking at this again on our drawdown, I would look back at as this starts to decline. I would look at the fibs that you bounced down from, right? So you had a lot of resistance here at 786, 73.24. That would be my first logical stop. Come back down to earth. And at some point, you're going to go up and down again and possibly make another double top shape. This is still early on. I mean, the entry I like here is 75, 79. It's at 75.18, right? So it's only 60 points from the entry, but I would look at this as a potential trade setup, okay? It's overheated on the MFI. Good trading opportunity. Let's not spend too much time on it so we can look at the other things. Ethereum. Lots of people requesting Ethereum. First, let's get our downside. As you guys know, this tracks very closely to Bitcoin, obviously, right? I mean, the charts look very similar. Let's go ahead and get, this is our trend-based fib doing a wave projection here, guys. Look at that. Look at that strike there right on 867. What was the actual price here on Ethereum? 878, okay? Look at that strike right to the 1 fib. We need to add some fib levels to this. Let's get the 1272, and let's get, where's our 618? There you go. Look at that. Price is bounced on it right now, 486. And what do we got? 1618 is going to be too deep. That looks okay. Let's go ahead and look at it this way. So you struck the 1 fib, you rallied back up. Now remember, this is a downward projection, but as you can see, it's respecting the fib still, right? You rallied back up, and price right now is trying to hold the support of 1903. You're at 1952 here on a 3-day chart. Now, again, Ethereum, whenever you see these down candles, you can sometimes, these form double tops, right? If you have a strong down move that holds support level, a key support level, you can always look for it to flip back up. And that's your entry opportunity when it does something like that. That's what you want to look at on Ethereum. Looking at the downside projections, because really most of the questions were, where do you think? I know most people want to buy spot, right? So when you're looking at this, where's it going to go? Well, guys, if the key concept is sweeping your lows that you put in, your June lows, right? Remember, this moves with the equities, shock and surprise, but crypto moves with the equities. But your June low in 2022, basically you hit 867. So if you sweep it, your next low, to me, looks like you're going to 519.96, so 520, okay? So 520, so you're making a shape or you're starting to sell off. Your next level down would be 520. Where could it go from there? I mean, you're looking at 129 here on the fib, okay? At the end of the day, does that sound crazy? Well, that's back down at your pandemic low, okay? So I know it's crazy if you bought it and you rode it up here and you held it through this whole massive, how high did we get in Ethereum? Almost 5K, okay? If you held it down here from $120 at the pandemic low, look at that. What was the actual candle or the price here? 87 bucks. 87 bucks. So 130 still gets you above the pandemic. Could it come somewhere in between here? Yeah, of course it could, guys. Again, we're looking at targets based on fibs. And I'm looking at a 3-day chart. But I like the way that this is laying out. So sweeping this low, you'd come down sweep 867, possibly down to 519. Remember, this will move at a beta, a premium to the other markets, just like Bitcoin. And that's what I'd be looking at. So you could say 519 to 600, somewhere in that range, right? So we could drill down in smaller time frames. We got more charts to get through. But those are two key areas I'm looking at here. On Ethereum, let's get some upside projections as well. Let's measure this with a trend-based fib so you guys have potential re-entry points here. There you go. That laid out nice. Look at that. So if this was to come back up, let me expand this a little bit. If this was to come back, if you end up holding that key level we just showed you on the previous fib layout, well, then look at this. You have your 2126 provided two 3-day candles. So basically, 6 days of resistance right here. So I would watch for this to come back up and then watch for this at 2040, okay? Because that's a key level too of your one fib. And you can always, guys, this is a fib wave projection. So your upside risk to me would be above, 2222 would be your upside risk if you're looking to move into this on some type of potential trade setup around that 2126 level. Easiest way to look at rebounds, let's switch this to a daily so you get more candles. But you can see you're trying to put in a doji here, okay? And of course, dojis can fail because it can mean a trend reversal after you have a large move in one direction or the other. But if it does hold, where's my fibs? Oh, up here. If it does hold, you can always grab a simple fib retracement from that high and go down to that low, and then look at your key retracement levels, right? I like to start usually looking at the 50% retracement, which for me is a 486, but the 618's at 2060. You see that gets you back down to the base range. 786 at 2098, and then the one fib, of course, would be that 2126 range we just showed you on the previous fib. So if I was looking to short this, I would wait and see if this candle holds, just like I previously showed you. Maybe get up to the 618, 786, and make this type of move, and you'd be looking for that contact there with the fib, with the idea being you're printing a double top, breaking the neckline, and then descending further. Let's look at Tesla. Tesla is a fantastic trade. I shared with you guys, gave you that entry at 208 before we got to 208, and look where Tesla is now, 163 at the neckline of your double top. Look at that gap. You got a gap here, okay? So at the neckline of your double top, if earnings come in stable or the market's okay with the earnings, and maybe you fill that gap and then come back down because Tesla's making a series of lower highs. Classic Gartley pattern right here, okay? The actual Gartley pattern. I'm not talking about a harmonic Gartley. Classic Gartley pattern. And again, Tesla, the one fib, looking to sweep that low at 100. So you'd be looking at a drawdown, in my opinion, to $70 in that range. Let's say 70 to 85 for this next bottom until you rally back up on the big rally and then come back down and capitulate for that, let's say $30 to $50 Tesla, which I will snap up those shares, snap them up. One of the few things I will be holding long term when we actually bottom. Again, looking for that bottom in October. So this is what we're looking at Tesla. So re-entry points, guys, they're going to be the existing trade setup. Again, I told you before, 208, 220 would be a peak entry here if you did come back up, but 208 is an area you can watch. Upside risk would be your 220 to 235. Okay, so if you did come back up and I don't know if Tesla's going to come back up, but if it did come back up, that would be your upside risk, is looking at that to the upside. Looking at Nvidia. So Nvidia, we've been working this in and out, and I stopped trading it because we were basically day trading this because of how much it was moving. Nvidia had I think it was 150% move. I mean, stupid move, guys. Stupid move off the October lows. Is all the AI, 160% is all that. Everybody's going to have AI. AI is going to end up killing everybody, in my opinion. It's going to be like Skynet. Maybe that's my age because of the movies that I've seen, like War Games. It's going to end up taking over our weapon systems and thinking it's a video game. But this is what we're looking at, 160% move. So we've been ping-ponging. We were trading this over here when we first got up here in this range, and that 267 to 275 range. We got up to 279. Nvidia is close to it. It's 260.76. Nvidia hasn't reported earnings yet. Okay, so that's another reason it's hanging out here. Your upside risk here is 288, I'd say, to 302. Okay, so upside risk. You're holding this tight range, as you can see here on the upper echelon. You may, This is not a bad entry. If you were to get into NVIDIA here, be prepared. If they report good earnings, you could see a move up, okay? You could see a move up to that 288. So it depends. You know, you can take small positions. Everybody has their own method for how they like to trade. I'm just saying what I would do. I'm waiting. This is a wait and see for me. Okay, this is a wait and see. If we look at this, let's print this to. So where's NVIDIA going? Its low was $100. I have it going down to that next level. So sweeping the $100 low on the drawdown, looking at 91.89 somewhere in there. So 85, 90 bucks would be where it would sweep when everything comes crashing. And you're printing a double top here on the 3-day chart. So this is not a bad entry point. It's just not peak entry, and they haven't reported yet. And I have no visibility into what they're going to say, guys. The AI thing is really hot. But this has been a really nice for multiple 4 3-day candles now. So basically 2 weeks, you've seen the video just hover here at that range at 279. So again, that's a nice double top. What does this look like on the daily? A lot of gaps, but you can see this here on the daily as well. But this is a tough range. Maybe if this comes up a little bit more, I'd like to see a candle like that, just like get a wick above it, hit 280 or something, and get rejected again. But this is not a bad range, but you can see it's clear. I mean, this is basically a Wyckoff range when you look at it, right? It's clearly trading between 263 and 279 over and over again. So if I was going to trade this, I trade it on the upside. Really like it at 288 though. If it can get one little impulse left, one little impulse coming up for its earnings, I would love to see it get up to that 288, and that would be my short that I would take. Okay, here, not a bad trade, but I just don't know what they're going to say. Looking at MSTR, right? MicroStrategies, Michael Saylor, again, gave you that entry of 333 up to 360. And you can see we got our entry. We actually got the entry point 3 times, guys. You could have took this. It's at $300. Okay, so it's dropped $33 already. MicroStrategies, when it sweeps its low, I think you're coming down to 102 or sub $100 on the next move down, obviously, especially as BTC crumbles. So you could easily get sub $100, but that is where the 1618 is 102. And your previous low was up here at 130. So I like that 102 level. And you may get another chance. Again, if the markets want to rebound one more time, you get a push up and then you're printing a double top, okay? Just like you did here, and you sold off. But of course, you have this larger disjointed double top as well. I had to laugh because there's a couple of comments in YouTube saying, dude, I wouldn't short MicroStrategies. That's crazy. Well, you shorted MicroStrategies and you could have got in at 340, 347 almost? Yeah, 347.63, and you're sub $300 now on the trade setup that I shared with you guys. Okay, again, upside risk 360 where you got to over here. Okay, that was your upside risk. And you may just see something like this as earnings season progresses. You come down, that was poorly drawn. You come down to some level like it is now and come back up and get a re-entrance opportunity. Okay, and that's what you need to watch for is these opportunities to re-enter trades. Don't chase anything after it's had a drawdown like that. You can see the nice double top print on your volume ratio as well. Man, how many more charts are there? Only a couple more. People are asking about First Solar. I thought this would be short. I wasn't going to talk a lot. I thought this would be a short video. First Solar, guys, you're at 215. Remember my entrance for this trade, I said, wait till you hit 217, and the upside risk is 228. Obviously, 244 would be ideal, but you're in a clearly defined Wyckoff trading range here, and you up thrusted above 217. You got to 221, and now you're at 215. We've traded this multiple times. Some of these stocks I've had positions in, take profits, had positions in, take profits, and then I move on to other things like the DAX and the S&P, okay? But just going over these trade setups, as you can see, this is at the upper end of its range. You see if First Solar holds up here, yeah, I would wait again and see if you get another rebound up in this area, see if it gets rejected again. But that is a range above 217 with your upside risk to 228, okay? You want to see if you can hold that range and fall down when the markets roll down. Volume again getting really choppy, volume getting very low here on First Solar. Looking at the 3-day chart on gold. Man, gold had that big move. We talked about it in the Discord after when it happened. 'Cause I think when did that happen? The day after I made my last video. But it got what, $7 short, or I guess it happened because we talked about it in the video as well. I got $7 short of 2055 and sold all the way off to 1969. Wow, 1969 it got to. And now it's struggling back at 2001, 2004. The dollar's still looking weak. So you have gold hanging out in this range. I'm going to hold on to the idea if we get another impulse up to that 2055. I mean, I think at this juncture, well, the video crashed there, guys. Sorry about that. The recording crashed. I guess the video is getting too long, but let me finish my thoughts on gold and silver and wrap this guy up. So, I think what I'm saying is at this point here in gold, I'm still waiting for it to get overbought. Okay. So that's what I'm looking for. I mean, you can have the price struggle to get back up here, but I want to see this get overbought because that's been a very clear indication of when to take shorts here on gold. So that's what I'm wait for on gold. And if we can come back up, maybe we get resistance at 2023, but really 2055 is, as you know, going back 2 years, that's just the best possible trade you could take if everything stays in place, the volume stays low, the markets look like they're still rolling. That's the best time to really trade it. Let's go ahead and jump over to silver, wrap this long epic video up. Looking at silver, again, we got to the resistance of 786 at 25 spot 47, and we got a big wick up to 26. Silver's at 25.30. So I'm probably waiting on this as well, waiting for gold to get silver's overbought here, right? But it can get very overbought. But really want to see silver follows gold the way altcoins follow Bitcoin. Okay, so if gold comes up really strong and finishes with a big overbought signal, and silver really finishes like this, wherever that price is, whether it's here closer to 26, that might be an interesting area for me to consider shorting as well. Guys, definitely come check out our Discord. Love to see you there. Have those exchanges pay for your first month. All you gotta do is download them, message Lee in the Telegram. I'll talk to you guys then, and next video will be out soon, guys. Take care, everybody. Have a fantastic weekend.